Hello, and welcome to another edition of Beaver Finance. I'm your host, Robert T. Anderson. In today's episode, we're here to talk to you about what to do before you invest. So if you're new here, welcome to our channel. If you haven't yet subscribed, please consider clicking the link below. This way you'll get notified on all our future videos. So today we're here to talk to you about what you need to do before you invest. So we'll talk about 5 practical tips on how to be prepared before you buy your first investment. So you won't want to miss this. So the top 5 tips before you start investing. Number 1 will be to conduct a budget. You want to understand your income coming in and your income or in your expenses going out. You want to get it. You want to do this because you need to know what your cash flow situation is like. If you don't have much on a month-to-month basis, you're not going to have a lot to invest each month. So by conducting a budget, you can start to see where your money's going, maybe a few areas where you can make improvements and free up some extra cash so that you can start to pay yourself first and put your money to work for you. Also, through this budget exercise, you would start to uncover, if you have too much money going to debt, and maybe that's where you need to first prioritize as you're looking to also come up with an investment plan. There's a lot that can be uncovered through going through a budget exercise. So you'll want to do that first. Second, you'll want to put together a net worth statement. So this would be listing all your assets and then listing all your liabilities, if you have any liabilities. So an asset, for example, would be a home, a vehicle, any cash you might have, any pension or workplace investments. If you already do have any current personal investments, that would go there. If you have equity in your business, perhaps that would go there, or any other assets that you could think of that you might have. You can list those in the asset category. Then, if you have any liabilities, so that might be a mortgage, a loan, a line of credit, hopefully not a credit card balance, but if you do, you'd list that there as well, or anybody else you might owe money to, or any money on or for. Could even be a student loan. List that under liabilities. This, along with your budget, will start to give you an idea of where you currently stand, because you need to know this information to make calculated decisions that will best guide you towards reaching all of your financial goals. So completing a net worth statement will give you an idea of where you stand right now. Next, you want to review any debts or other obligations. So we briefly touched on debts and what they might be. So this will be important that if you have too much consumer debt, so loans, lines of credit, potentially student loans, credit cards, you want to get that well under control. However, if you may only have a student loan at a low interest rate, and you want to start investing, that might be okay to do simultaneously. But you may want to put more towards debt first, even though there's the potential for a higher return on your investments. So you want to take a look at that too. You'll also want to make sure you do have an emergency fund set up. So hopefully you've got access to cash in case something comes up. If you want to learn more about emergency funds, how to maximize an emergency fund, or how to structure your emergency fund, we have videos on both of those subjects on our YouTube channel. So you can check those out after this video. Next, you're going to want to set certain investment goals as well as targets. So you're going to want to take a look at first, what's a monthly contribution rate that is achievable based on the budget exercise. So that could be one goal. I want to save $500 per month or $1,000 per month. Or, you have a certain account balance size that you want to reach year 1 in year 5. That could be a goal. Or you could go through the exercise of figuring out how much retirement income you need in retirement, and then work your way back to how much you'd actually have to save. Now, most likely that'll be a much higher number than what you're able to do. However, it will shed some light on how you need to change some behaviors or work on earning more income in order to reach your eventual retirement goals. So certainly setting some small goals to get started, setting some big goals over the long term, can definitely get you going in terms of being prepared to start investing. Next, you want to consider the benefits of different investment accounts. So depending on where you live, if you live in Canada, the go-to accounts that we have available to us as Canadians are the tax-free savings account and the RSP. Now, we have videos on what tax-free savings accounts and what RSPs are. We also have a head-to-head comparison versus video that you could also check out and learn all the details that there are before you start investing as well. However, if you live in the States, you'll want to know what a 401k is, an IRA, a Roth IRA, or a taxable account. And we have taxable and open accounts in Canada as well. Because part of investing is managing your tax situation over time. Because if you invest solely in taxable investments, on an annual basis, you will need to potentially report any capital gains, dividends, or interest earned on your investments annually, and that will eat into your return. So by taking advantage of different accounts available to you, depending on where you live, understanding those accounts will give you an advantage to grow money, potentially either tax-free or tax-deferred, depending on the account type. So figuring out which account type is best for you will be a goal, of course. Also, potentially considering both accounts could be an option, whether that's tax-free savings account and RSP combined, or combining a potential 401k in Roth IRA. So that rounds out our top 5 tips. Now, if you've watched any of our previous videos, you'll know that we like to include a bonus tip. So our bonus tip would be to make sure that you also, through going through a budget, going through your net worth, going through any debts or obligations that you have, reviewing your investment goals and setting targets, and also considering the different accounts and the taxable advantages of each, you'll want to understand what your marginal tax rate is. So through that whole process, you'll want to look up online, and we'll put a link in our description below on a website where you can start to input data, whether that's your income, self-employed income, in Canada, potential RSP deduction that you might already do or are considering, and be able to calculate approximately or roughly what your marginal tax rate will be. A marginal tax rate is essentially if you were to earn $1 extra, what the tax rate would be on that next dollar. So if you earn $100,000 and you would earn $101,000, your marginal tax rate would be the rate at which that $1 is taxed. That's also important if you get a tax deduction. You'll want to know your marginal tax rate so you know approximately at what rate you will get a tax return. So from a tax deduction. So if you earned $100,000 in Canada and put $1 into your RSP, you would want to know what your marginal tax rate is so that you knew approximately how much you'd get back. So knowing your marginal tax rate is important. So if you've missed any of our previous videos, please check them out after this video. We had a lot on what different accounts are available to you. And we also had videos on top 5 ways to build wealth, and lots of other subjects that might interest you. So don't forget, if you haven't already, to please like this video if you got some value. Hit the subscribe button so you can stay connected with us and ensure that you're notified on future videos. We got lots of great content coming out. I've got some new videos on deck for you. Question of the day. So have you started any of these steps yet towards being prepared to start investing? Let us know in the comments below. We'd love to hear from you. We're also on Twitter and Instagram at Beaver Finance. We post daily content on our platforms, whether that's, as I mentioned, Twitter or Instagram, so you can stay connected with us. And we'd love to hear from you. So if you have any suggestions, you can also comment below. Thanks for watching this episode, and we'll catch you in the next video.